An initial public offering can be both a financing and marketing event, which gives a company critical access to capital for the future. The typical IPO preparation process will take 3 to 6 months. Organizational preparation, marketing the deal, and current market conditions will determine the ultimate length of the timeline. When preparing internally for an IPO, a CFO needs to make sure their organizational team, S1, and other documentation, marketing preparations, and investment mix are all in order. With regard to organizational preparation, before an IPO, key management roles should be filled. An interim CFO can be acceptable for an IPO, although investment bankers and sometimes investors prefer to have a full-time hire for the TTW, testing the waters, and roadshow meetings. Independent board members should be identified well in advance, as recruiting and selection will take time. If you are based in California, you need to ensure that you meet the California law requiring that at least 3 board members be women by 2021. A solid chair is needed for the audit committee, which should also include at least 3 independent members. Board members also need to be compensated. You should define board compensation and stock grants. These can be instrumental to the success of an IPO. Finally, deputize a company leader, typically the CFO, to manage the day-to-day IPO process. Preparing for the S1 filing is essential. Related party loans will need to be repaid or canceled prior to filing your S1. Prepare your pro forma projections. Hire a consultant or agency to draft the box and business sections of the S1. Company positioning should be thoughtful and well documented. Don't worry about the boilerplate sections. Your counsel will draft these. Clean up your cap table. Prepare a pro forma cap table if a stock split or reverse split is planned. Meet with your financial printer to prep for the S1 filing. You also need to lay the foundation for the marketing of your deal. Most IPO deals suffer from lack of analyst and investor awareness. A pre-TTW helps publicize the company's desire for an IPO and provides valuable feedback from investors without SEC restrictions. Your team should attend as many analyst conferences as possible to increase company visibility. Investor mix also matters. Make sure your most recent round of financing has at least one outsider that sets the price for the round, and that you have at least one crossover investor, an investor who invests in both venture capital, private equity rounds, and IPO, between your last round and your IPO. You also want up to 30 to 35% insider coverage of your IPO in normal times, and up to 100% in difficult times. If you cannot meet this hurdle, make sure that you have an anchor institution as a backer of your IPO. Get your docs in order. You'll need at least 2 years of audited financials with quarterly numbers broken out, reviewed, and approved. You'll need to provide prior quarterly comparisons in your F pages and MD&A. A systems and control audit does not need to be done. You get a pass for the IPO event, but not for the next year. SOX compliant is also not required since most companies will qualify under the Jobs Act. Make sure your 409A valuation is current. Our advice is that you compute this quarterly in the year preceding your IPO. All contracts, patents, trademarks, copyrights, etc. should be current, completed, and filed. And don't forget to complete indemnification agreements for all officers. Finally, streamline coordination with your IPO partners. Set up a data room to facilitate due diligence and S1 preparation. Financials, corporate governance, intellectual property, and due diligence materials should be evaluated with counsel before uploading to your data room. Underwriters Counsel and your counsel should review the company website and make recommended changes for SEC compliance. Meet with your D&O insurance provider and your NASDAQ or NYSE rep to get the registration process started. Preparing for an IPO takes organization, communication, and diligence. But if executed well, it will set you up for a successful IPO outcome and give your company access to critical capital for growth.